Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Justin Mosley. He is a seasoned real estate investor with a deep passion for building wealth through alternative assets, particularly real estate. As a United States Naval veteran with a background in economics and finance, Justin brings a unique perspective to the industry. Shaped by his experiences across 40 plus countries and his extensive education, including a master's in economics and finance, Justin has Lestermore Capital, where they focus on value add single family residence, as well as townhome developments, boutique hotels, and a keen focus on short term rentals. He also has a property management company called Sunshine Gold, and an STR Millionaires group where he does education and coaching. And so, Justin, welcome to The Wealth Flow.
Awesome. Thanks for having me on. And you read the whole bio. I pretty much say I'm a real estate investor from Baltimore that loves his family and working out, man. That's you can pretty much sum up all that into those two things.
There you go. There you go. Now, I love it. Just really want to kind of dive into your story. What I typically do with all my guests, Justin, is really go back to, where did you grow up? What led you eventually to real estate investing?
Yeah. So I grew up in Baltimore, Maryland. Have you ever been there before?
I have. Just very short. I think we flew into Baltimore.
Okay. So. Yeah. Flew in, flew out, man. That's all you need to do. It's not much going on. So that was a big reason for me getting out of there and going to the Navy. So at 18, out of high school, went to the Navy. Fortunate enough to really travel around the world. I was stationed in Yokosuka, Japan, which probably really opened my eyes up to really the world, right? I think especially as Americans, or no matter where you grow up, if you stay in that same bubble, no matter what your environment is, you tend to kind of look at life through that prism. And I think early on, I realized there was a lot more out there. So going to Japan and like traveling to a bunch of different countries like Brazil, Australia, all that very early on, really kind of opened my eyes up to just opportunities and all that was out there. So after the Navy, got out, went to college in Florida, fell in love with it, and then went back to grad school after a long story about me and my wife, which is always interesting. So we can get into that later. Ultimately, I realized the way I was going to be able to make it based off of, whatever you want to qualify as success, and really having the quality of life that I wanted, real estate just made the most sense for me.
Yeah. Okay. And so what eventually did you get into with respect to real estate? What was your first kind of entry into that?
Yeah. So I did the exact opposite of most folks. So you always hear the story of, they buy a single family home or something, they move on to other spaces. So I jumped headfirst into commercial multifamily. So through YouTube education and all that kind of stuff, everyone was screaming, multifamily is the way to go. This is what you need to do. And I was like, all right, well, screw it. If I'm going to do it, let's start off big. So, really scrambled around, learning as much as I could. I joined a couple masterminds, got in on a few deals early on to some syndications on the multifamily side and really loved it. But the cash flow wasn't there and I didn't want to continue to work a W-2 job while I was doing it. So it then led me into kind of the short-term rental space, and it's been, on to the races from there.
Okay. And with the short-term rentals, maybe tell us a little bit about your first one and kind of how that's progressed.
Yeah, so my first one was actually a triplex in West Palm Beach. Still own it to this day. I'm a firm believer in buy and hold. Just assets in general. But really, was just taking a chance. I saw an opportunity in the space where it wasn't terribly sophisticated. There's zero institutional capital in there, and really the amount of cash flow was really appealing to me. So I tried to take the multifamily kind of premise, right? There was 3 units. I was like, I'll try to do this with 1 unit, put it on Airbnb, VRBO. And it worked almost immediately. So I spent the next kind of 2-3 months trying to get the other 2 tenants out of there after I purchased it. And once I did that, I got all 3 online, and then it kind of just grew from there, buying condos and other multifamily in the South Florida region.
Okay. Is that primarily where your portfolio is?
No, so that's where I started. So it started off in, really, what is it? Kind of Palm Beach County, Broward County. So Fort Lauderdale, Palm Beach Island, if you're familiar with the area. And, I ran into the same problems as every other kind of, real estate investor starting off. I bought 12 properties on my own and ran out of my own money. So I went back to the drawing board and really took what I learned from multifamily on the syndication side and started to grow my portfolio that way. So now we're in Florida, Mississippi, Alabama, and Louisiana.
Okay. Are all those on the coast, or tell me a little bit about what the type of properties?
Yeah, they're mostly on the coast, and we've kind of evolved over time. So first started off buying much smaller units, condos primarily after the triplex. And it really was kind of just price point, which is funny because I always tell people today, right? Like focusing on ROI, right? Like that's way more important. Right. Find a good deal, you can find the money or structure it some way, right? But fortunately enough, a lot of those properties, actually all those properties I bought, 2018, 19, 20, have either doubled or tripled in value at this point. I'm actually just refinancing 2 properties today and pulled a bunch of money out of it. But now we kind of focus more on higher end homes. So between that 1 to 2.5 million, and where rates are, we can kind of negotiate on the front side. We do a value add play on the back side and then build equity in the properties, but then really just focusing on cash flow. So my name of the game for me in investing is like, how much cash flow can I generate from these properties?
Okay. No, that makes a lot of sense. And I guess maybe kind of before we get into the higher end ones that you're doing now and in raising capital for, what were some of the lessons along the way that you learned with that first initial 3 unit, and then as you progressed, and was there anything that changed from the perspective of scaling up from that first one to kind of where you are today?
Yeah, I think one of the things I always try to articulate now to people is, one, it's kind of like a slogan I've used, successfully or not, I don't know. We'll find out in the next few years. Is short-term rentals is so much bigger than Airbnb, and even just the idea of what Airbnb is, right? So what I mean by that is, I think I specifically use STRs to distinguish yourself from Airbnb because, and it's funny, I talk to real estate investors that I'll say STR sometime, they have no idea what the heck I'm talking about. But, when people think about, the short-term rental space, they tend to think about Airbnb, which is fine, but they also tend to think of it as just purely a vacation thing. And one of the things I learned very early on, and that's helped me kind of grow and expand my business, is that, like, I look at short-term rentals as its own kind of asset class, in that you're just using the real estate as the underlying asset, right? So it's the thing that appreciates over time. It's the thing that gives you massive tax benefits. But appreciation and all that stuff is great, the way the tax code is written for short-term rentals. But the STR part is really the business. And no matter where you're at in the country, there's a good chance that there's a demographic that you can go after if you do your research, if you do your due diligence, and actually cater to what they want. So an easy example is traveling nurses, or going next to airports where you're really targeting stewardess, pilots, things like that, people that are very transient or just need a place to stay for a couple hours to a few nights. And when you do it that way, it opens up massive opportunity, because now you don't have to just look in the coastal Florida regions. you can buy a place in rural Iowa or in some obscure part of Arkansas or Ohio, and get really good at that, and you can make a lot of money in this space.
Yeah, yeah. And a lot of those, well, depending, the pilot example may be more short term, but the traveling nurses, that kind of thing, it's more of a midterm or longer term rental to some in some respect. So
No, 100%, right. And for me, again, I think anything that you're not locking someone into a long term lease, I pretty much qualify as short term, right? Even if it's quote unquote midterm, if they're not signing a year or two lease, like I look at it the same.
yeah, for sure. And so, are any of the ones that you currently have that style? It sounds like a lot of the Florida ones would lend themselves more towards, vacation, but maybe not. Maybe there are. Are you catering to nurses there?
No. So I really haven't focused in on the nurse one. I think that's just the easiest example for people to understand. What I
Yeah.
do like is kind of the events, places where people can hold meetings and stuff like that. So we actually just bought a property in Louisiana outside of New Orleans. And one of the things we're doing there is, weddings, different kind of get together, bros trips where they go out fishing, hunting, the whole nine. And you
Yeah.
don't have to be like, we're not event coordinators, right? Like I have a property management company, but what we're doing is we'll partner with people that help do weddings or events or something like that. And the place is just the place that they're staying, right? So you can hold an event there. You can do whatever it is you want. The cool thing is that we can charge a premium for that, right? Because there are very few places that do that. Largely, though, our business is built around more of that. Not I wouldn't say vacation traveler, but it is vacation-esque. And that's why I like the larger homes, because my thesis has always been, if you're going to travel with a group of people, or let's say two families, I got 4 kids. I don't know how many kids you have, if you have any.
Two.
Say you
Yeah.
wanted to go on a vacation together. I mean, your options are limited. You can either go get a bunch of hotel rooms somewhere, or you can stay at a large house where the kids have a place to stay and hang out. You got a pool. You might have like the water, 2 kitchens. You can cook. We can help you out with concierge service. So that's really the space I like to play in. It's really higher in hospitality is what I like.
Yeah. Yeah. Okay. And have you seen over the course, obviously, during COVID, and kind of the years, few years, kind of heading out of that, it seemed like there was just this huge craze for short-term rentals, and a lot of people, it peaked, and it's kind of pulled back a little bit in a lot of markets. I know there's probably ways to get around that, but tell us a little bit about what you've experienced. And it sounds like you've got kind of a diverse portfolio of different things. Have you seen less of a pullback on the larger properties? And, kind of what are you seeing, I guess, in the marketplace right now?
Yeah. Just like anything else, like real estate, even this STR is like hyper local. So it really depends market to market. You're going to see different variations and different things. What I have seen is across the board, there has been a pullback of, occupancy levels, and ADRs, obviously because people have gone in. The cool part about it is, and what I love about this space is, you can be really creative. One, because you can pivot very quickly. Goes back to, if I don't have a tenant in there for a year, they're about to come out, right? Like I can make decisions and change very quickly, right? But what I think hurt the space or hurt people that got into the space early on is that when people are riding that crave of, or that wave of COVID, home values are going like this. And then spit rates started to go up as well, right? So if you're not buying right on the front end, you have unrealistic expectations of where your average daily rates are. When market starts to normalize, which we are seeing now, right? Like, one, the money's not going to be, or the cash flow is not going to be where you thought it was going to be, right? And if you're not a high quality operator, right, like there's a good chance that business is not going to be successful. So in a lot of ways, I'm happy for it. I mean, it sucks for the people that kind of, jumped in and tried it, because I'm just a huge advocate of like, hey, if you want to do something, go out and do it. But I have to be really strategic on like where you're buying, what you think your true average daily rates are, what do you think your occupancy truly is, right? Even on the worst case scenario, that if you're not running those kind of numbers like a true business, it's easy to get swallowed up in this space.
Yeah, for sure. Well, let's maybe talk a little bit about that. What are some of the things that if you're looking at a particular market or an area and you're saying, hey, what's some of the tools that you're using to research and determine, what you feel like you'll be able to get as far as average daily rates and such?
Yeah, I think the gold standard still is air DNA, although there are a lot of other players that are coming into the space that are providing some pretty solid data. Uh, Air DNA is interesting because I think they're probably the most robust in terms of just information, but it is largely because they're just scraping data, right? So they don't do a great job of distinguishing between good operators and bad operators, amenities inside the properties, where you can see a huge discrepancy from properties that are very close to each other, or maybe given the same average daily rate and numbers like cash flow numbers from something that like they're not able to account for. Maybe it's right downtown, or maybe it's close to the water where it's in walking distance, something that people are willing to pay a premium for. But there are a lot of other companies out there. Like we partner with a company called Revity. They're our strategic partner that really help us do a lot of deep diving into markets and into where, regardless of what's going on in the market, like what are the good operators? How are they performing? And we really benchmark ourselves against them, because if they're a true business and a true operator and they're doing a good job, that gives me good confidence that we can go in and that our numbers are correct if it's similar, versus trying to look at averages. And I think people tend to look at the averages in areas, and that's where it can really be misleading.
Yeah, yeah. No, it makes sense. And then what about so an average operator, or just say so operator versus somebody who really has it dialed in? What are some of the levers that you see that aren't necessarily being pulled when it comes to just being an average versus really kind of being at the top of the market?
It's a lot. So everything from like optimization of properties. So really understanding what your demographic or avatar, like to say, that's why my wife verbiage, but it makes sense. Like you're going after that you're catering to, understanding like in that market, what are that consumer looking for, right? And making sure that you have those available. I think one of the things that people miss very often is customer behavior. How do they actually search for properties in areas? One of the things we learned very early on, especially in Florida, because we started moving north just because we just saw opportunities there. So we don't buy as much in South Florida as much. You have to really understand that when a person is searching for a property, if you don't have some key elements or key amenities in there, you're not even going to be seen, right? So it's not even a matter of like, if you don't, so a good example of like hot tub, that's an easy one. We can go deeper than that. But if you're in a market where most properties have hot tubs and you don't have a hot tub, it's a good chance that when people go to search on these different platforms, you're not even going to be seen at all. So you're not even giving yourself an opportunity to get good reviews, to boost your profile and all these other things up. So it's like kind of more nuanced stuff where you have to really start looking at it as a business, that if you're not really zoned in on your market and who you're going after, it can be really challenging.
Okay. Yeah. So hot tubs is one example. Are there some others that you see within your market? And again, I know it's market specific in certain areas, but what are maybe a couple other examples of similar to like the hot tub thing that people are searching for that they may or may not find on your property?
So unique experiences are a huge one now. I think, especially in the space that I like to play in, where I want to charge a premium for the average daily rate, right? So when you do that, there's kind of this push-pull, right? So the benefit of this and why I love this space is that unlike pure hospitality, when you talk about like hotels and stuff, we don't have those really high operational costs that they have, right?
Right.
People that go on these platforms, they understand that somebody's not going to check them in, right? I can automate a lot of the processes, getting people their codes out on time, all these other things, like setting up with a concierge service. But they still expect like, the house to look exactly the way it does in the picture every single time. They don't care if money was just there. They wanted, like, if I chose this place based on things looking exactly this way, I want it to be that way. That was something I learned, that people get very upset. That and towels, man. I've seen people lose their mind. It's like there aren't enough towels. That's a huge one.
Right.
What else is, that's a really good one. There's another one in regards to positioning properties is really important as well. So the way you position your property throughout the different distribution channels is really important. And then also too, and this goes back to the just Airbnb, it's like putting your property across multitude of distribution channels, not just focusing in on Airbnb or BO. Pure Space is one I think a lot of people don't take advantage of, to where you can fill in the gaps and really charge a premium. So like in our larger properties, if you have a day or two in the middle, like I could charge someone that wants to do a photo shoot, right? $2,000, $3,000, $4,000 for a couple hours. Cleanup's easy peasy for the most part, right? And that's ways that you can kind of fill the gaps in of your calendar. And I can go on tangents right now, so I think I may have got off your initial question, but I gave you.
That's okay.
It's all good. So hopefully they appreciate it.
Yeah, no, for sure. And what are some of the other channels besides Airbnb and Vrbo that you have seen really pay off? You mentioned Pure Space. I don't know that I've heard of that one, but what is that one?
Yeah, so I'm not going to give all my trade secrets away, but Pure Space is definitely a good one for sure. So, okay. And it's really that caters towards like meetings, group settings, photo shoots are a big one. So it doesn't work for every property, but like if you have a unique property, that's a great one. People love to take photo shoots. They like to just stay in unique properties. The irony is, if you have a really cool area, you could probably do tiny homes and make more and pay less because just the fact that like it's different. Like people love different.
Right.
Like it's really, or anything Instagram worthy is something people like. But to go back to your initial question, using social media and social media ads, I think is one of the fastest way to make sure that you're getting bookings and building a reputation for your properties so that you can get that kind of organic. It's almost like word of mouth, but social word of mouth traffic. And if you can still drive it into the traditional platforms, but I think the next iteration of this business is people kind of moving more towards direct bookings, just because you have more control and you can actually charge your customers a lot less, still make the same amount of money because they're not giving out those fees to the big boys.
Yeah. And so let's talk a little bit about direct bookings on that. What are you seeing as a percentage of direct bookings versus, every other platform?
Tiny.
Kind of where...
Tiny. And I think that's the thing. No one that I've seen has been able to figure it out yet to where they can get truly organic traffic into the booking, right? Because you can spend, thousands and thousands of dollars for ads and all kinds of stuff to get bookings, but then you might as well just use the platforms, right? I mean, effectively, you're paying for market. I mean, that's what your platform for, like a steady flow of people coming in and building a reputation on the platform. So, but like I've maybe seen 30% is probably of the operators that I know personally. It's probably the largest spread of like direct bookings versus like from platforms and stuff like that.
Okay. Yeah. 30% is really, just in talking with other folks as well. It seems like a lot of folks struggle even to get to the 10% range. So to get to 30 is really, yeah. And I agree. I mean, it's cool to be able to do that. What on the social media ads and stuff? Are they? I mean, is there a specific like type of ad? Is it based on like if somebody does a search for a particular area like Smoky Mountains or whatever, then it's popping up as kind of an advertisement because of those keywords?
Exactly. And, whether you're doing it yourself or you're paying some ads managers, $1,000, a second to run your ads for you, you kind of figure it out over time. And then, we like to take stuff in-house. I'm just a proponent of if I don't really understand it, it's hard to manage it. So I think my wife and I are the same, how we run our businesses. We tend to just kind of go deep into it and then eventually kind of delegate it out just so we have a baseline understanding. So it really depends on the market, the property. I think a really good one, but it's hard, is to get information from your guests. We do that through our property management software where we'll ask questions periodically to really get a real good sense of like, what are the matching characteristics of the people that are staying in our properties. And that gives us kind of information to then go ahead and target those people with ads for the future.
Yeah. Makes sense. And although a lot of times people will collect, depending on what type of internet, access by, sometimes you can give them just the code and you don't collect any of that. Obviously, you're going to get some of it when they're doing the booking, but it's, just the primary person that's paying. But if you can open it up to them having to log in, now all of a sudden, not everybody, but you might be advertising and spending all this time and energy on advertising to the 4-year-old kid.
Exactly, right? You don't know.
So,
For sure, man. And that's what I'm saying. That's why I like the space. It's really about being clever and being creative and finding new ways to kind of improve in this space. And again, like it's the wild, wild west. And that's what I love about it. Like this space is in its infancy, in my opinion. And I think the people that are really digging in now and understanding the dynamics of customers and properties and all the opportunities that exist, I think are going to be really successful in the future.
Yeah, I think so too. If you just look at, all the big players now are getting into the space as well. You got Marriott buying properties that used to just be, single family homes. Really nice ones, but still. So there's big players for sure getting in. I do think it's at the infancy. And like you said, you travel with any group of people, even just, if you're going to go with family, there's no way to make that make sense in a hotel.
And that's just massive opportunity. You're 100% right. Like we've talked with some different, I have relationships with folks that have relationships with different hotel chains and stuff. And they're extremely interested in the space, right? But I think like most big companies, like they go in with caution. But but you see, I know here in even South Florida, like the Ritz-Carlton, like residences and all that kind of stuff. Like, they understand that, there's money to be made. It's just figuring it out, right? And I think that's the biggest thing.
Yeah, for sure. Let's talk a little bit about, we have listeners that have some short-term rentals, and it's always, I always love to just kind of share what people are using. So tell me a little bit about some of the tech and stuff that you guys are using, whether it be, and everything from like door locks up, what property management software are you using?
Yeah, so I like Guesty. I think there's a lot of different options at this point. I think Guesty's pretty sticky, so we're dug in. Sure, but I constantly talk with different tech CEOs and stuff that are rolling out. Like there's really one interesting one that I think they still connect to Guesty, but they're providing kind of like payment systems, processing, also bank accounts and all that. So there's some really cool stuff out there. I actually just use like Turno. I use a lot of the same software now as we've grown as I did very early on, just because I'm very familiar with it and it all connects to Guesty. They're pretty good about that. Door locks and all that. I used to use Sifley, but we've moved to Ring. Actually, I like Ring a lot, and it's about consistency across the board and being able to make sure that because the space is so disjointed with the tech, no one's been able to kind of have like a custom all-in-one solution and stuff. So we're kind of just like piecemealing it together and making it work. So, and I use a lot of virtual assistants as well. Like I deeply believe in trying to automate and then use people, I don't want to say low wage, but it is, right? But like, they're great. They've been awesome since the beginning.
Okay. And let's go back to Turno. So you're using that for your cleaning service. Yeah, they've got a good platform. I use them as well. We only have one, so it's but I'm super interested in the, just from a personal, for me, more of a lifestyle deal where to be able to have multiple homes in various areas where we like to travel. To me, just is what really turns me on about it. I just got to get mine to perform better than it is. It's like having a second home that I'm not really having to pay for, but I'm not really cash flowing on it at this point. So we got to get it to where it's actually cash flowing for it to make more sense for me.
Yeah, for sure, man. And that's how people, even if like you're not like all in, short-term rentals, right? Because like you can set it up. This is what I do in my education program. Like I'm really an advocate of leveraging technology automations. You can set it up that it's pretty hands-off, right? Like you can manage it. You don't need to be in it, but there's a huge learning curve, right? And you have to be willing to put it in on the front end. But to your point, right? A second home or a vacation home, if you're someone that likes to go to the same place every year, and there are lots of people out there, like this is our spot, we go here every year. Why not operate as a short-term rental, right? And at the very least, have it pay for itself, right? On the season. So it's like, I just think it just makes sense for anyone that wants to continue to build wealth through like real estate, along with whatever else your kind of like, belief in wealth building looks like.
Yeah, for sure. For sure. I totally agree. And in your bio, you talked a little bit about boutique hotels. Tell me a little bit about that. Have you guys done any of those?
Yeah. So that's kind of the next iteration of what we're doing to kind of grow and scale, especially in South Florida. That's where we're kind of back at it. We just acquired a boutique hotel in Miami Beach. For a lot of reasons that, they're not making any more beachfront properties in Miami. And
Right.
I just believe in Florida, especially South Florida, even as it gets more expensive, like the international travel. It's right near the convention center. And again, it's more experience-based thing. There's a generation of people now that, and it's funny because I'm in this space, but I'm always I'm a hotel guy. I go to Four Seasons, so I go to Ritz. My wife likes that. But there are people that they love the unique experience. They like Airbnb. They like the short-term rental space. And if you can make a cool, like, hit place for somebody to travel, even if it's not like they're staying there, but just so when they go in to go to sleep and they got a really unique space that's Instagram worthy, I think there's an opportunity there, and that's what we're doing. So we're trying to replicate that in markets that we really like. Like, we're not in it yet, but like Nashville's a really appealing one. Obviously, South Florida. New Orleans is another one that we like. So it's just kind of the next iteration of like, where can we find opportunity and value?
Yeah. And so what are you doing differently on the, like that New Orleans property you were talking about, where there's an opportunity to have events? I've seen a lot of properties that would lend itself to that seem really cool. And, obviously it's a different spin, right? You're going to have to do certain things differently on that one. But what are you finding that you're able to advertise it and have people be able to take advantage of using it as more of an event space?
Yeah, and it just goes back to understanding, not only that kind of traveler, family, or vacation-esque type traveler, making sure that you're, getting out there and building relationships with event planners and what are those guys called that? I don't even know if people use them that much anymore, but some people do. The travel-esque people, whatever the term is, right? And two, for these areas, it's a lot of word of mouth, believe it or not, right? Like in these kind of,
right.
It's not really an outskirt town because it's probably 20 minutes outside of New Orleans, but I mean, it's a little bit more rural, but it's beautiful, right? The play for us there is, it's 9 acres. It already had like a main house that's like beautiful trees and stuff like that. We're putting a pool in there, and it had 2 other units. So eventually our goal is to then develop it and build more, like maybe tiny homes or something on the property and actually larger capacity. And then it just kind of builds a reputation of, a couple people throwing an event there, a wedding, and just kind of grow that business organically while doing all the standard things that we do for the property.
Okay. And then on some of yours, just curious on, insurance prices, that kind of stuff. I mean, obviously, everything's gone up, but insurance has really taken a jump. Are you, has a lot of yours gone up? And then also, what resolution are you looking at on that?
Yeah. I used to take pride in saying that, we cash flow so well that like, insurance isn't an issue, but since rates have like just skyrocketed and even insurance has, like, it definitely has been a challenge. I've always been able to solve for insurance in one way, shape, or another. But there's been a couple of properties that I've either had to pass on just because we couldn't get it insured, or it's a lot tighter than I would generally like. As kind of a libertarian capitalist and stuff, I'm not advocating for it, but I'm hoping that government will step in and maybe take it back and do something about it. Right? I'm not going to hold my breath. And would I really love that? Probably not. I think that's largely what happened in Florida. Insurance rates have been just artificially low for so long that I think now with, one disaster, the Fort Myers thing, I think the insurance companies like, look, like we can't even operate down here anymore. And that's why a lot of them pulled out, and, you see the effects of what's going on. Right. But yeah, it's a challenge like it is for everyone else. I think one of the ways we're trying to solve for it is finding a commercial policy that where we can insure them all together and get some savings on that end. We haven't pulled the trigger yet, but I think that's probably going to be the solution for the future. Just because the way we insure it, we do umbrella insurance because we have to make sure that, especially when we're raising capital, whether it's for our fund or syndications, that we're preserving and protecting the principal capital at the very least, right? So if there is kind of like national, disaster, disaster that wipes the property out, we got to make sure that we can get all of the principal capital out for sure. So that's just something we have to work through, but we'll figure it out for sure.
Yeah. What about, let's talk a little bit about the ones that you're buying. You mentioned doing a value add type play. So what are some of the things that when you're looking at these, are you doing full blown remodels on them, or what is it that's getting that initial, kind of built in equity by buying it at the right price, maybe doing some modifications to it?
Exactly. And it's twofold, right? There's been massive opportunity in my eyes since rates have gone up. That where we've had, especially, and that's why we kind of moved into that higher tier property. There's a lot less competition, right? By nature of when you start talking about a price point in the $1 million to $2 million range, it just naturally is, right? So we've been able to really be able to negotiate hard, walk away from the table, and then suddenly we're asked to come back, and we'll be able to find a number that makes sense for both of us. And one of the things I love the most about single family homes is the appraisal process, right? Like multifamily is based off of the NOI, cap rates, and all that kind of stuff. Like what some people hate about single family homes, that it actually gives me an advantage because I can go into the market. We can look around and say, hey, if we do X, Y, and Z to the property based off the comps in this area, we can feel pretty confident that when we get that appraisal, that we can, increase the property value by, X amount of hundreds of thousands of dollars, and that's work. So it's been amazing so far. But I do think we'll get to a point. I don't know if it's going to be anytime in the soon, but in the future, where when we start looking at STRs truly as people that actually build up large portfolios, that it probably will be based more on, cap rates and NOI and stuff. But, I can have a property that's generating, $300,000 a year. A guy that has the exact same property next door is getting rent for, let's say $100K, right? $10,000 or $8,000 a month. Our property value is exactly the same, which right now that's great because there's buying opportunity there. But in the future, I think there will be some differentiation there or distinction.
Yeah. I agree. I think, as it continues to grow, it does make a big difference. You're already seeing a little bit of a premium here and there where it seems that, it's kind of locked in where you can, in fact, do short-term rental. I guess that's another one. What about regulation? Are you seeing anything with respect to that concerns you about, certain areas? And what are some of the things that you look for to be able to assure that, your business plan still works? You can still do the short-term rental.
For sure. And I could probably say this for every question you ask. It depends, right? So moving forward,
Right.
that would be what understood. The market really dictates that a lot. Again, I like risk. I think by nature, my upbringing, whatever, I am just not risk averse. I tend to look at things as opportunity. So for one, I don't even mind. I think largely regulation has come in most areas because there has just been nothing on the books, right? So in a lot of ways where it has been blown up through media, social media, television, of this narrative of they're banning short-term rentals, largely when you read the fine print is we're putting some kind of regulation in, licensing, something like that, right? We're giving permits and all that. There are some places that have had some really extreme positions on STRs, particularly over in Europe. There are some places that are really, really crack down on it for, whatever the reasons may be, right? But we're even open to going into markets like Mississippi is a great example. Markets that we're in, like a Pass Christian, where they actually have they set a limit on the amount of permits they're going to get, right? Say 250. So we actually started buying in there as much as we could because in our view is at some point natural supply and demand economics is going to come into play, right? These are some markets that we've identified that have been growing. They haven't been appreciating like most of the country. People are moving there because it's more affordable. People also like to travel to these coastal regions and stuff. Like, hey, I'm not flying to, Gulfport from in South Florida, but if you live in that, rural Mississippi area, the inland, like that's where they go. That's where they go to go out in the water, have a good time. Biloxi, they go gambling and stuff. So as the population increases, as people tend to just be more aware of it, as people move into those areas, those properties going to appreciate, and also too, like the supply is cut off. So I really look at it from like a macroeconomic standpoint of like, if they're putting in permits, I'm fine with it, right? But I don't go to blue states. I have a lot of the same principles. I came over from multifamily, where if it's not a landlord friendly area, state, county, I tend to stay away. So
yeah.
So I guess we've kind of de-risked ourselves in that way, but I think there are always ways around it. It's kind of how I look at it.
Yeah, no, makes sense. What about financing? What are you doing on these for financing? DSCR loans, or what is it that you're typically doing? And I guess how much are you typically wanting to put down on them?
Yeah, so it just depends. I'm a huge advocate of working with local lenders. They generally are more flexible. They understand the market a lot. But then it's always deal by deal, to where we could buy all cash. We're always going to put debt on it after the fact, but I like to come in around the 70% LTV range.
Okay.
I think coming in, I very much was an advocate of like trying to put as much debt on it as possible. But as we move into the fund world, as we've moved into syndicating, I think there's a lot of advantages of coming in a little bit slightly lower LTV for protection.
I do too. Yeah, I do too. So, and with seeing just rates go up as much as they did to with people that had to refinance or do something, it can catch you a little bit there. I think sometimes it doesn't juice the returns as much by not leveraging it up as high as you can. But I think from a protection standpoint, like you mentioned earlier, it's ultimately you're trying to protect the principal of your investors. And I mean, that's kind of the number one goal. And so, the returns might not look as good, but yeah, I think you put yourself in a better position.
Yeah.
So
it's always a fine balance, but this is why I love single family home space, even though we still do, commercial and the, boutique hotel style side and stuff, is that like one of the things I really noticed in real estate in general, and I've always believed in, is single family homes, right? Like the narrative of the American dream was built around like home ownership. And even if someone can't buy a home, I think in the future, people will still always want to buy or live in a single family home, right? Like I have 4 kids, right? So, I mean, my wife and I do relatively well, I like to think. And, an apartment's just not going to work, right? Like at some point, if I couldn't afford a house, I would go rent one. And I think in a lot of desirable areas you've seen now, rates have gone up, and you could have seen some kind of proportional decrease in single family home values. And I can tell you here in Jupiter, Florida, home values have increased. They haven't decreased. And so I continue to believe in single family homes.
yeah, I do too. And from a appreciation standpoint, I think, single family does really, really well when times are good, and when rates come down a little bit, it'll just continue to compound that. So
For sure, man.
Well, Justin, this has been really cool, man. I love diving into this kind of thing, and we had spent a little while since we've had somebody that really specializes in STRs, and so this has been fun. Tell everybody where they can find out more about you. Obviously, you speak to your educational programs as well. But yeah, how can people find out more about you, and if they want to invest, connect with you?
For sure. Connect. I think I'm on all social media. So if you search Justin C. Mosley, you'll find me. Instagram, LinkedIn, the whole 9. But yeah, so we have our education program called STR Millionaires. I made it blatantly obvious that one, I believe in short-term rentals, and that's how I became a millionaire. So you can Google that. We have a full suite of community. I just rolled out a new app, which is super cool. So download it for free, consume free info. And if you want to reach out to us to invest, let's some more capital.
Perfect. All right. Well, I've got two other questions for you that I ask every guest. And so one would just be any advice you would give somebody who's just starting out in their investment journey?
The biggest thing is like find one thing that you're interested in and just dive deep in it, and you can figure it out, right? Like I think every asset class has a way to make money. So get good at that before you move on to anything else, and just believe that you can do it. Because a lot of people are going to tell you can't, and screw 'em. How about that?
Yeah. No, I love it. I think that's really good advice. And yeah, it's too often people get a little bit of that shiny object syndrome. And I mean, there's so many things out there. And I think you're right. You just got to get good at one and go an inch wide and a mile deep on it.
Yeah,
so,
for sure, man.
how about a book recommendation? Doesn't have to be real estate related, but it certainly can be. Just something that's been impactful that you've read.
That's a good one. I'm going to give you the super cliche one because I mean, realistically, that was what got me into real estate was cash flow quadrants. That probably changed my perception of money, the way I should look at money, and really confirmed all the stuff that I think I intuitively knew about kind of like the W-2 world because it wasn't for me. I knew I wasn't going to be successful at it, and that kind of reaffirmed it. And that's when I took the leap into real estate. So that's always a great book if you haven't read it. Still haven't even read Rich Dad Poor Dad to this day, man. That was enough for me, and I've just been going 100 miles per hour. So screw it.
Nice. Well, yeah, I think there's a lot in that one that wasn't in Rich Dad Poor Dad. So, but it's a good one. Yeah, for sure. Man. Another Robert Kiyosaki one. So fantastic. Well, Justin, this has been awesome, man. I sure appreciate it. And thank you so much for being on the Wealth Flow.
Awesome, brother. Hey, I appreciate it, man. Thanks for reaching out, my man.
Yeah.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.